stocks like Hindustan Aeronautics Limited, Bharat Dynamics, and Paris Defence have surged over 30 to 50% in the last few months. This year's defence budget is 5.94 lakh crore rupees. Defence exports have jumped over 330% in the last 5 years to 16,000 crores. India's defence sector has been on fire lately. Stocks like Hindustan Aeronautics Limited, Bharat Dynamics, and Paris Defence have surged over 30 to 50% in the last few months. In this video, we'll break down what's driving this momentum, which companies are leading it, and whether it's a good time to get in or take a step back. Let's start with the big picture. What's causing this sudden interest in defence stocks? The first is geopolitical tensions. Following the recent Pahalgam terror attack, India launched Operation Sindoor. Historically, these kind of escalations have led to higher defense spending. At the same time, global events like Israel-Hamas and Russia-Ukraine conflicts are forcing India to rethink its defense partnerships. Number two is government policy support. The policy environment is very favorable right now. Programs like Make in India and Atmanirbhar Bharat are pushing for local production. There's also been a big shift in procurement with Defense Acquisition Procedure 2020 and Defense Production and Export Promotion Policy. Thousands of items have been moved to import restricted lists, and the strategic partnerships model is including private players more actively. Number three is higher defense budgets. This year's defense budget is 5.94 lakh crore rupees, with 1.72 lakh crore allocated for capital outlay. That puts India as the third largest defense spender globally. Number four is export growth. Defense exports have jumped over 330% in the last 5 years to 16,000 crores. Buyers now include countries like Armenia, the Philippines, and Mauritius. Number five, private sector and startup activity. FDI has been raised to 74% under the automatic route and 100% with government approval. Startups are getting a boost too. Over 350 of them have been onboarded through initiatives like IDEX. Now let's take a step back and talk about the stocks that are currently leading this rally. At the top is HAL, focused on aircrafts, helicopters, and engines. 83,000 crore order book, 28% ROCE, and a PE around 10. At number 2, we have BEL, specializes in radar and communication systems. 65,000 crore order book, 24% profit growth. At number 3, we have Cochin Shipyard, building warships and submarines. It has a strong order pipeline and 55% return this year. Then we have Paris Defence, which works on drone tech and optics. It has a strong export outlook and a profit growth of 32%. Then we have Data Patterns, which deals in defense electronics and satellites, profit up 32% and revenue up 46%. And finally, we have Zen Technologies and IdeaForge, which focus on simulators and drones respectively. Both of these are in emerging segments and have strong government demand. Now let's understand if this rally is sustainable. But for that, we'll have to take a look at both the sides. On the positive side, there's strong structural support on policy and capital expenditure. Export growth continues to open up new markets, and order books are long-term and relatively predictable. On the other hand, valuations are high. Some names are trading at PEs over 50. Execution delays and bureaucratic red tape, especially in PSUs, are still concerns. And if tensions de-escalate, the market could see corrections in these stocks. So now with all of this that's happening, what should investors do? If you're a long-term investor, focus on fundamentally strong names like HAL, BEL, and Cochin Shipyard. A staggered entry approach like SIPs might help deal with valuation risk. And keep an eye on metrics like ROCE, order backlogs, and export ratios. If you're more of a tactical trader, watch for news around budgets, defense deals, or policy changes. Stocks like Paris Defence and Data Patterns can respond quickly to news, but they also carry more risk. And always keep in mind 3 key risks: sudden geopolitical shifts, policy changes, and execution delays. To sum up, the Indian defense sector has solid long-term drivers supported by policy, spending, and export growth. Stocks like HAL and BEL offer strong fundamentals, while companies like Paris and Data Patterns are growth-focused but come with higher risk. Valuations are something to be cautious about, but with the right approach and research, there's definitely opportunity here. If you like this video, give us a big fat thumbs up and do not forget to subscribe to the Wright Research channel. Also, let us know in the comments below, are you tracking any defense stocks right now?
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.